TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 72. You get the Nasdaq down 17. S&Ps are off 11.5. Gold contracts down $4, trading at $1,220 an ounce. You have silver up 3 cents at $15.31 an ounce. Platinum is down $3, trading at $9.56 an ounce. Light sweet crude off $1.28, $38.51. The bonds. This is what we have with the bonds. The 10-year note flat at 129.12. 30-year bond up 17 ticks, 164.01. Both the 10 and the 30 yesterday went to higher price. Now you had higher volume, an extension of volume from the prior days, but still tremendously lighter volume than the downdraft that had occurred on March 1st. Bonds and notes want lower price. King dollar. King dollar right now is up 141 ticks. We're at 96.19. King dollar had been up about 270 ticks. Bottom line, it looks to me like King dollar is going to roll over once again. Last 3 days we've been up on lighter volume. Today it's giving it up on price. Euro right now is down 15 ticks at 111, and the yen is trading at 112.40. If we go over to the S&P and we take a look at the SPY first, what you're going to see inside the SPY is this. Yesterday you come down with lighter volume. Today we gap lower. We open at the price point of 201.74. Right now we're at 202.20. What I expect you're going to see here, you're going to see a rejection of lower price, dramatically lighter volume. Your last day of trading before the holiday. When we take a look at the correlation yesterday was you're down on 81 million shares. You were going into 134 million, and today more than likely we do about 80, 90 million shares. You're going right into where it broke topside from. So I expect what you're going to actually have here is a small ABC structure on the way up inside the larger ABC in the cash market that wants to go to the 2087 level. NDX 100, the 3 Qs, same type of setup. We did yesterday, it was a sideways move in the Qs, 20 million shares. That 20 million was coming into 31. Qs already opened lower, already rejecting lower price. Gold market before King dollar. What you have with gold is this. Gold got down to the 1211 price point out here today, and this is what was definitely needed in the gold market. Why? Because yesterday you had the expansion of volume on the way down. We did 266,000 contracts. Today I expect you're going to do about 200, 220. You're coming into 341,000 contracts as well as 366,000. So you're down to the lower end of the consolidation. Thus far, gold has rejected lower price, which is pretty impressive in the context of this is almost like a Friday in a week, at the end of the week, and that's when they can really take gold apart. We go over to the bonds. What do we have with the bonds? Okay, so the notes first. The notes right now, 360,000 contracts. We got to a price point today of 129.15. You're at 129.12. What I expect you're going to see is another rejection of higher price. The 10-year note, and the 10-year note is still in a complex ABC structure on the way down. 30-year bond, we take a look at the 30-year bond. What you have with the 30-year bond is this. That got to a price point this morning of 164.10, and we'll see if that fails. That has not failed yet. Now, King dollar. King dollar is the one you want to pay attention to out here today, because it looks to me like King dollar, this is the end of the run topside once again on King dollar. King dollar in the past 5 days has come off its low. The low that was generated out there on King dollar was 94.60. We're at 96.24. Each and every day the volume contracted. Bottom line, King dollar wants dramatically lower price. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here tomorrow morning, 10 o'clock.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solutions CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.